Hmm. Hello, good evening, everyone. Thank you for tuning in today. Thank you for tuning in today. Today, I'll be sharing on a comprehensive guide to CFD. Let me do some self-introduction first. I'm Daryl, and I have been with Philip for around 3 years now. So if you have been tuning to our past webinar, you probably have seen me, you probably have heard me before. So if you do not know me, I'm the night CFD dealer. So if you happen to call me in the night, you will probably recognize me by my voice. Today, I hope I'll be able to share with you some of my knowledge, and I really hope that you're able to learn something and lastly, to enjoy the webinar. Along the way, if you have any questions, please feel free to write your questions in the chat box below. Towards the end, there will be a Q&A session where I will be addressing to some of the questions. Okay, so just like every other educational videos or webinar, right, there will be a need for disclaimer. So this is my disclaimer. This presentation today is intended for general circulation only. Everything discussed today are all opinions. Please do your own research before investing. Should you need any kind of advice, kindly consult a financial advisor or contact your TR. So this is the content for today. I'll be sharing on CFD, which also means contract for differences. Also the type of CFD instruments and how people leverage and trade their CFD. And also, towards the end, there will be a technical analysis. So with that being said, I'll start my webinar. So there are two types of market condition. So in the stock market, right, there's two types of movement. So the first one being the upward movement and the second one being the downwards movement. Okay, when it's going up, we call it bullish. When you hear people saying that the market is very bullish today, right, it also means that the market is in the upwards trend. However, when the market is going down, we call it bearish. So in a bullish situation, right, when we want to long the stock or long something, right, it also means that we want to buy that particular thing. So in order for it to profit, right, the thing must go up. So in order to buy a stock, right, we have to look at the ask price. So likewise, if we want to sell the stock or we want to short something, right, then for us to profit, it must go down. So we must look at the bid price. So if you use our platform before, you probably have seen this bid ask pricing. So you can refer to the picture. Okay. To buy, we look at the ask price, which is the green box. And to sell, we look at the bid price, which is the red box. Okay, with that. So what is CFD? CFD, which means contract for differences. CFD is a derivative product, which means that having a value derived from an underlying assets. Okay, it is traded over the counter, traded via a broker-dealer network, which in this case, if you are trading CFD with Phillip, right, is traded under Phillip. Okay, one advantage of CFD is that you are able to buy or sell, which means you can profit in both bullish and bearish situations. Then again, this is depending on the type of strategy you want to use. When you hold or when you long one stock contract, right, you do not own the underlying assets, but what you're getting out there, right, is just a contract. Okay, CFD is a contractual agreement between an investor and a CFD broker to exchange the difference between the value in the value of a financial product. Okay, between the contract opening and the contract closing. Okay, do note that different country equities, right, have different market hours. So if you hold past the opening hours, right, then there will be a financing charge, which you will find out more later. So what is the difference between stock and CFD? So one key advantage CFD have against the stock is that we have leverage, which means using lesser margin to gain exposure, which we will discuss later on, okay? In CFD, right, you will be able to go long or short, which means you can profit in both bullish and bearish situations. However, for stocks, right, if you are using our platform, you will be able to short or leverage if you have a margin account and have a SBL account. The interest is the same if you're using a margin account to trade. Unlike CFD, right, you only need one account and you'll be able to leverage and short and tap into other different asset classes, which is more convenient for you as a trader. And however, for CFD, right, there will be financing charges lah. Okay, if you hold past the CFD overnight. Do note that when you purchase a stock, right, we own the stock. However, for CFD, right, it's just a contract. So you do not own the underlying stock. So this is just a brief advantage of CFD, which I'll explain a little more in depth later on. Okay, we will be able to go long or short. When we think that the stock will go up, we can buy. When we think the stock go down, we can short the stock and then profit from both situations. So we are not restricted by any market directions. Next, we have leverage, which means that we can use lesser money to own more contracts. Unlike stocks, we have to pay the full price for the stock. And we offer multi-asset classes, ranging from FX, indices, equities, and commodities. And lastly, one reason why people use CFD, right, is because of hedging. So hedging is like an insurance. In the event of news, especially those bad news, right, your portfolio can be protected. So we can hedge our portfolio against the news. Okay, so using S&P 500 as an example, right, to explain how we can trade on two directions using CFD. So whenever we think that the market will go up, right, we can long the bottom and take profit at the top or wherever we think that is the highest. However, right, if we anticipate the market starting to fall, right, then we can immediately short the market and we are not restricted by any market directions. We can profit in both rising and falling market. By now, you should already know that CFD by now you should already know that CFD is traded on margin. Okay, using the power of leverage, right, we will be able to take on larger positions using lesser initial deposits. With leverage, we can amplify our gains. However, do note that leverage is a double-edged sword. Okay, we can also lose a lot more if the market goes against you. So reason why people use leverage is because we do not have a large amount of money to diversify our portfolio, or rather to gain exposure. So we tap on CFD to gain the exposure. So let us compare in terms of money, okay, the difference between stock and CFD. Okay, let's say we want to long 100 company ABC at $100. And for this counter, the margin requirement is 10%. So for stocks, in order for you to hold 100 at $100, right, you will need $10,000. However, using leverage with CFD, right, we only need $1,000. And using $1,000, right, we will be able to gain exposure of a $10,000 contract value. So how can we amplify our gains or loss? So for gains, if the stock goes up to $150, then we will be profiting $50 per share. So for stocks, we will be up $5,000 and that's a 50% gain. However, for CFD, right, we will be profiting the same $5,000, but actually we are up by 500%, using $1,000 to profit $5,000, and that is 500%. So let us hear about the bearish side, okay, when the market goes against you. So for company ABC, right, when it goes down by $10, we will lose $10 per share. For stocks, it will be down by $1,000, and that is 10%. However, for CFD, right, we'll be down by $1,000, and that is 100%. So this is why leverage is a double-edged sword, and they can amplify your gains and losses. So let me show you how you can see leverage if you are using our platform. Okay, using our platform, right, using Apple as an example, let's say we want to long 100 Apple at $160. So what you will do is you will launch an order ticket. Okay, you will be able to see the gross contract value, the margin requirement, and the long short financing charges in the orange circle, like the one on the screen. Okay, so over here we can see that the margin requirement is 10%, which also means in order for you to hold 100 Apple contracts, right, you will need around $2.1 thousand of SGD of margin to purchase the contract, which worth around $16,000. So from this ticket, right, okay, this order ticket, okay, you will be able to see that you will be able to see the long short financing charges. Do note that different counters have different margin requirement, financing charges, and do make sure, right, you check all these, right, before you place an order. So these are the different types of CFD instruments. Okay, we have the equities where we offer CFD and CFD DMA. We have the commodities, which are mainly oil, gold, silver. And we also have indices like S&P 500, US Tech, Wall Street Index, and many more. And there are even mini contracts for the indices. And next we have the Forex. So for our equity CFD, right, we have access to 8 different global stocks exchange, and these are the 8 different global stock exchange. Do note that each country have its own operating hours, and when the operating hours is over, you will not be able to buy or sell. You will not be able to trade. Okay, you can find out more in our website. Okay, so if you have used our platform before, when you search on counters like DBS, Singtel, SIA, you'll probably see this. Okay, the blue logo, right, named as EQ, that is the equities, which is your stocks. Okay, the green one, named CFD, is CFD, which is a derivative of the stock. However, the darker green one, which labeled as CFD DMA, right, these are the DMA. Okay, do note that DMA is only for Singapore counters. So a lot of time, right, customers have been calling me asking, hey, how come I cannot sell my DBS? How come I cannot close my CFD position? It's because, right, they actually click on the wrong symbol, and we must know that one is equities, one is CFD. So these are different. If you trade equities, you have to use the equities one. If you trade CFD, you have to use CFD. So equities is equities, CFD is CFD, and DMA is DMA. So before you long or short, right, make sure you check on the logo before proceeding. So for equity CFD, okay, these are all cash settlement. It mirrors the price movement of the stock. From the picture, right, you can see that there is no additional spread. Okay, you can see that the bid-ask price for the stock, CFD and DMA all have similar pricing, and there is no additional spread. So all 3 of them have the same pricing. Yeah. Okay. So when you search for SGX counter, right, you may see a CFD DMA. DMA means direct market access, which is only applicable for SGX counters. Okay, the order will be filled on the extra exchange and will participate in the order book, which works very similar to stocks. Okay, we'll send the order to the exchange, and do note that this DMA, right, is all based on the last done price, not the bid ask price. So at this point in time, you'll be wondering, DMA is better because it provides the transparency. We'll be able to monitor via the exchange. Yes, it's better but then, right, for the transparency, right, we have to pay a higher commission rate. Okay, do note that if you are trading CFD DMA, right, in order to locate them, you have to click on the CFD DMA. Okay, so this is just the summarized version of how CFD and DMA works. Okay, DMA gives you full transparency. It trades on the market liquidity and order book of the exchange. Okay, let me give you some time to read, or if you want to read up more, you can actually find out more in our website. Okay, moving on. So how do we calculate the profit and loss? Okay, assuming, right, we long 10,000 quantities of stock A, okay, at $2. Since we're in a long position, right, we want the stock to go up for us to profit. So if it goes up to $3, then we are profiting $10,000. If the stock goes down to $1, we will lose $10,000. Basically, the difference between the price entered and the exited price multiplied by the quantity. Likewise, if we are in a short position, in order for us to profit, the stock must go down. So using the same example, if it goes up to $1, we will lose $10,000. And if it goes up to $3, we will lose $10,000. Sorry, repeat. If it goes down to $1, we will profit $10,000. If it goes down to $3, we will lose $10,000. So literally the opposite from a long position. Okay, so what is commodities? So do you know that commodities, right, are actually part of our everyday life? Okay, and they are actually like the raw materials uh of our daily life. We use as our daily life lah. Okay, to help you better understand the meaning of commodities, right? Let me give you a simple example. Okay, let's look into the girl in the picture. So for the girl, right, can you see based on what she's wearing? So her clothes, right, are also made up of cotton, which is a commodities. And where usually for girls, right, they like to do a lot of online shopping and stuff like that. So where they get those shopping things like, for example, Taobao, Shopee, and all these require delivery, which means oil. Okay? And oil is also a commodities. So what the girl is holding, a cup of coffee. Okay? Which is also another commodities. Okay? So girl being girl, she like to dress up, she like to buy jewelries, gold, silver, and these are also commodities. And when she goes out, or rather when she goes shopping or whatever, okay, she will either drive or take a public transport. And these transport are also operated by oil, which is also another also commodities. Okay. So in short, right, commodities are segregated in three different sectors: metal, energy, and agriculture. So metal are like our gold and silver. For energy are like our oil and gas. Agriculture are like the crops and livestock, right, that they raise and then harvest to provide food. So in our platform, we do allow you to trade on commodities, and these are the counters that are available in our platform. Okay, there's no expiry, and the margin is as low as 20%, and we do provide the mini contracts. Okay, so if you remember earlier on, right, how I shared on how you can see the margin requirement and the margin required, the long short financing charges. So this is the same thing to give you a better understanding of what is a mini contract. Okay, let's find out the difference between a USD1 and a USD100. Okay, so for USD1, right, the value per point is $1. So if you are in a long position, if it goes up by $10, you'll profit $10. So unlike the USD100, the value per point is $100. So if it goes up by $10, you'll be profiting 10,000. You're profiting $1,000. So assuming, right, we want to long go at 2.3K, we can see that the contract value between both, right, is different. One, the USD1 run, right, is 2.3K margin, 2.3K contract value. However, the 100 one, right, is 230K. So if you were to do some math, right, if we divide the gold USD 100 by 100, right, essentially we are getting the gold USD 1. So the good thing about USD one is that it will require lesser margin. Okay. So traders who wish to gain their exposure but have lesser capital, right, can leverage on the USD one to gain their exposure. Moving on, index. Okay, so what is index? This is a method, right, to track the performance of a group assets, or rather a method to measure the performance of a basket of securities. Okay, let's use STI, which is Street Times Index, as an example. Okay, STI is a market capitalization weighted index that tracks the performance of the top 30 companies listed on SGX. Okay, currently there are over 600 listed companies in SGX lah, but STI only tracks the top 30 companies. So all these 30 companies, right, roll up into one easy to read average price. Okay, if you hear people saying that the market is up, highly likely, right, they are referring to STI is up, not because STI is the market, but index is a representative chunk of the market. Because they have the largest and probably they have the largest and most influential companies, or rather the big cap companies in Singapore. Okay, the big cap companies are likely to be more stable and more established in Singapore. So as long as you stay in Singapore before, or you come Singapore before, or you stay in Singapore long enough, right, you probably have heard all these 30 companies inside the STI. If I were to name a few companies, they are like the our three local big banks, okay? DBS, OCBC, UOB. So let's say, right, you see STI doing well, right? So you know that likely Singapore economy is likely to be well, okay? However, do note that if you see that the big cap companies are not doing so well, right, then the chances of the smaller cap company, right, to outperform is slimmer because they are likely to be more volatile. So in our platform, these are the indices that we offer. Okay, you can check them on our website, and we do offer the mini contracts too. So same as the gold example, SP 500, we have the mini contracts, okay? USD1 and USD5. USD1 is the value per point is $1, and USD5 is the value per index point is $5. Then again, the purpose of having a smaller contract like the USD1, right, is for traders who wish to diversify their portfolio or gain exposure, but they have lesser capital. Okay? Do note that for our contracts, right, it tracks the performance of the cash index and it is dividend adjustment. Okay. Also, the price may differ from the cash index. Different indices have different leverage. Okay. So we offer up to 20 times leverage, and please check the leverage before entering an order lah. So next we have the for FX, which is Forex. Okay. When we enter a buy or sell trade, right, we are referring to a base currency. So an opposite transaction takes place in the term currency. So for this example, pound and dollar. Okay, so for pound, right, is the base currency and the dollar is the term currency. So for example, if we were to buy pound dollar, okay, we are essentially buying the pound, selling the dollar. So we want pound to strengthen and the dollar to weaken. So let us understand the codes, okay? Assuming that the pound USD is $1.2, 1.2, okay? This means that 1 pound can be traded for 1.2 USD, okay? And if let's say pound dollar is 1.3, this also means that 1 pound can be traded for 1.3 USD. So based on the quotation, profit and loss will be reflected in the term currency. So right, if let's say we are in a long position for the pound dollar, we want the pound to strengthen and the dollar to weaken. Okay, so when you hold a FX CFD position overnight at 5 a.m. for daylight saving and 6 a.m. for non-daylight saving, right, the position will gain or lose swap points. So the gain or loss is due to interest rate differential between the currency bought and sold. Interest is earned on the currency bought, while interest is paid on the currency sold. The swap points gain or loss, right, will be credited and or debited from your CFD account as a swap point adjustment. So based on our platform, right, we have access to more than 30 major global Forex pairs, and it tracks the performance of the underlying spot Forex. So the margin is as low as 5%, which is around 20 times leverage, and the minimum contract size is 10,000 for the base currency. So moving on, we have commission. Commission is only applicable, right, during the opening and closing of the CFD position. So let's say, right, when we enter a position, we are charged commission, okay? And we close the position, we are also charged the commission. So commission for equity CFD, right, are charged on the total contract value of the CFD. Do note that different countries' counter have different commission fees. Do check on the website to find out more on a particular country commission. And equity CFD trades done on the same day for the same counter, right, will be charged on an aggregated basis, which also means that it means that the collective commission is charged against the total value of the day transaction instead of a separate commission for each transaction carried out. So for commodities and indices CFD, right, they are charged based on per site per contract basis. And for commission, right, and for commission is not applicable for the FX CFD trades. So for more information, you can find out in our website. So now let's dive deeper into financing charge. Okay, like I said earlier on, when you hold a CFD position overnight, right, then you will be subjected to the overnight financing charges. Okay, this is accrued on a daily basis and is only realized upon contract rollover and liquidation of a CFD position. So one common question, if I buy and close within the same day, right, do I have to pay for financing fee? Remember I said that if you hold past overnight, right, you hold past when the market close, right, then you will be subjected to financing fee. So overnight doesn't mean that at 12 a.m., right, uh, doesn't mean after 12 a.m. Okay, what it means is hold past the market closes. So if you open and close the position within the same day, then there will be no financing charge. It's only charged, right, if let's say you close after the market close. So for example, using the US market as an example, if we open a position at 10 p.m. and at 1 a.m. we decided that actually we don't want this position, yeah, then we can close it and there will be no financing charge for this situation. So how to calculate the financing charge? This is the formula to calculate the financing charge. So financing charge, right, is charged on a daily basis of the closing price. So let me give you an example. Assuming we long one CFD and we close it on the third day. So day one, 1,000, day two, 1.2, and day three, you liquidate it. Okay, you do not need to add the financing charge for day three as you did not hold pass overnight. And this is the calculation for your total financing fee. Okay, so moving to the next part, how can we use CFD? Actually, there are many ways to trade CFD depending on your type of strategy, your goal, and what you want to achieve at the end of the day. So some people, right, they buy, sell, or hold. They buy or sell and hold. Okay, some use a scalping strategy. Okay, and some use their own self-developed trading strategy. So for the first strategy, right, where you buy or sell and hold. Okay, reason being is the cost, it costs lesser capital outlay and we will be able to attain a higher exposure, right, or rather a more diversified portfolio. Or if we plan to get dividends, then we can actually hold the particular stock lah. Okay, so for us to buy and hold, right, is we believe that the counter will do well. Okay, for us to sell and hold is also because we believe that the counter will underperform. So scalping is mainly a day trading strategy. Okay, so what the scalpers will do, right, is they will monitor the charts, and whenever there's a given opportunity, right, they will close the position, earning off small price changes. So for example, let's say you enter a stock at $41.5. Okay, so 5 to 10 minutes later, the stock becomes 41.55. So the scalpers, right, will take the profit of that 0.05 per share, right, and they'll do it over and over and over again and slowly stacking the profit. However, right, if let's say you want to scalp well, you want to do well in scalping, then you must be good at your technical analysis. So some traders, some CFD traders also have developed their own unique strategy, and this is based on the type of strategy you want to use. Okay, it can be a mixture of indicators. So they monitor the stock closely, looking at indicators like candlestick patterns, for example, if there's a head and shoulder, or rather if there's a cup and handle pattern. So people will leverage on it, no? So they will just trade accordingly lah, based on the patterns they see. So some people use moving averages or rather support resistance to help them make better decision when it comes to trading. So if you were to Google some technical analysis, right, you'll see some charts that are very complicated with a lot of indicators. So personally, I use a mixture of a few indicators, not just candlesticks, but moving averages, support and resistance before I decide whether I want to proceed with this trade. Then again, different indicate then again, all these different indicators, right, you must find what is best for yourself and based on your own strategy and your own liking. And ultimately, there's also hedging. So hedging using CFD, right, is a strategy used by some people. Okay, hedging allows you to hedge against the negative news. For example, earning report. So if you can see today, I think Facebook got a bad earning and they are currently down about 10% to 15% the last I checked. Okay, so if you actively trade in the market, right, you probably have known that earning day, right, the volume is very volatile. Okay, usually when the earning is really, really good, the stock will go up. However, if the earning is bad, then investors lose trust in the company and start dumping it. So like what we see on Facebook, people are dumping the stock. So yeah. So maybe if let's say you were to take on a hedge position, then this will be good for you. Okay. So hedging is like an insurance. It protects you against the unforeseen circumstances. So if the market goes against you, right, you also don't need to worry because you already hedged out your positions. Okay, sometimes you may even profit out of it. Okay, hedging can be done by establishing opposite positions. So two types of instruments to use, equities and world indices. So if let's say we want to hedge fully, right, we will establish an opposite positions for same counter, same quantities. So if we hedge out partially, right, means that we establish opposite positions in correlated instruments like for example STI. So indices are a good hedge against portfolio of index-linked stocks. So this is just based on fully hedged, okay? Assuming you already have 100 long in your stocks account, and for whatever reason, you do not wish to close your position. And you do know that something bad may happen, and you just decided that, okay, maybe I should just hedge fully. So, for example, you hedge fully against the earning report, and this counter, and you believe that this counter will do badly for this particular earning. So what we can do is we hedge fully by establishing opposite positions for the same counter and quantity. So we can see that when the stock goes down to $21, okay, our stocks account, we will be a negative $2,000. However, right, for our CFD hedge, right, we will be a positive of $2,000. So if you net it off, right, you're still okay because zero profit and loss. So maybe at $21, right, if let's say it goes down $21, you can use the profit from CFD to buy more stocks. So this brings down your average price. So this is based on my personal opinion and my views on the overall market for today lah, for this period of time. Okay, so if you have been trading actively, you probably have seen that there's news, negative news in the market today. Okay, and even though there's negative news, right, but they just may serve as a small correction because to be honest, the market is still very bullish today. So you ask me, the market is still showing a very strong upwards momentum, especially this period because there's a big companies doing their earning reports. And personally, I'm looking at and these two retracement level, the 4.5 level and the 4,000 level. And personally, I'm currently holding some stocks already, and I will look to buy more at the 4.5K level and definitely buy more if it goes down to the 4,000 level. So every correction is a good time to load up lah. So it's based on your own personal preference. So these are my levels that I'll be looking to load up lah. If let's say I have not loaded anything in my stocks account or CFD positions. So this is the technical analysis that I promised to do a technical analysis earlier on. So this is the technical analysis for Apple. So right now, right, we can see that Apple is forming a range. Okay, you can see the box there. Yeah, we observe that Apple is currently ranging from 166 to 196. And currently, as of yesterday, I think Apple is sitting around the support level of 166. And I really hope that they will be able to hold this support level 1 lah. Because if let's say they are unable to hold the support level 1, right, then likely they will go to support level 2. which is the 155 level, right, to gather more buyers such that the stock will go up. So in order for Apple, right, to touch the resistance 2, okay, they must they must be able to break past the resistance 1 and hold past close above lah. Okay. So short term wise, I think that Apple is a little bearish because they have formed a lower low and a lower high. So in order for Apple to be kind of bullish towards the resistance 2, right, they must close above the resistance 1. Yeah. So these are the levels to take notes for Apple. And this is my technical analysis for Amazon. Okay. So right now, Amazon is forming also a range, okay, between the 172 to 180. Okay. What I believe is Amazon will continue staying in this range for a while before touching on to resistance 2. So in the near term, I believe Amazon will touch on the support level 1, okay, which is the 172 level, before going to the resistance 2 at 188 level. However, if let's say they do not hold past the support 1, right, likely they'll touch on support 2 at 165 level to gather more buyers. So right now, right, what I'm seeing is Amazon have formed a higher high, okay, and they have not formed a lower low, which is a good thing, okay, which is a good thing because it shows that they still have a upwards momentum, and they are also close to their resistance too, okay. If there isn't any rejection at the 180 level, right, highly likely they will be able to break their 188 resistance level soon. And these are my levels to take note for Amazon. So to end things, okay, with the current market situation, right, what should you do? So there are a few things I can advise or rather recommend you to do. So the first thing first is do not time the market, but it's about the time in the market. Okay. I do know that a lot of us try to time the market, trying to get the best entry we could. But then if let's say we could turn back time, right, definitely I'll ask my parents to all in the stock market 20 years, 30 years ago. But then again, we cannot predict the future. So what I would say is we do not time the market, just be in the market, because we never know when the price will continue moving upwards. So one strategy I recommend people to use is the dollar cost average. And this is a topic for another day. And you can, if let's say you wish to trade, you wish to know more about it, you can actually Google it or learn about it when you are free, or read out about it when you are free. Okay. So in short, this strategy allows you, or rather ensures you that you stay in the market and do not miss out the opportunity. Okay. Otherwise, you can also take on CFD position to hedge out your risk. And remember that it is always good to take profit, be it a small profit or big profit. A profit is a profit. Just take profit. And if necessary, cut loss and wait for a better opportunity. So for our existing customers, you can create your CFD account here, like this. Clicking on account management, CFD, account opening. For new customers, you can create an account via poems.com.sg and follow the steps. Alternatively, you can call your TR or walk into our Phillip Investor Centers. We have quite a few locations, okay? Or you can scan the QR code. Don't worry, later there will be a page for you to scan the QR code. Okay? Or you can locate us. These are our location. You can find them in our website. Okay, if let's say you want to fund your account to do an internal transfer, you can follow this step. Yeah. So basically clicking on account management, stocks, online form, withdrawal form, enter the amount to withdraw, and then transfer into the account to CFD trading. Alternatively, you can do a pay now transfer, and do note that you have to add the CFD account, the CFD at the back. So your account number, then add CFD at the back. Okay, so for those of you who do not know, we currently have an ongoing promotion and there is a welcome bonus of a $30 CFD cash credit when you open a Poems CFD MT5 account. Okay, in order to be eligible for this, right, you need an initial deposits of $2,000, at least $2,000 within the month of opening your account, uh, within of the month of opening your Poem CFD MT5 account. This promotion is valid from 1st April to 28th June. So if you wish to find out more about this uh, promotion, right, you can scan the QR code. So right now, it's the Q&A session. So like what I said earlier on, if you have any questions, you can just feel free to write in. Uh, in the meantime, give me some time to read the questions asked. And if let's say you do not have any questions or you wish to find out more about the promotion, you can scan on the QR code on the top left. And if let's say you wish to create a new account, you can scan the QR code at the bottom right. So give me some time to read and yeah, I'll get back to you. Okay, so there's a anonymous attendee. Okay, you ask us quite a few questions. Okay, so let me try to reply as many as I can. Okay, so the first question you ask is on a historical past, how many percentage of traders actually able to make money in the long run? Thanks. Okay, so for this, I cannot give you an exact percentage of traders that actually make money in the long run, but I do know people who hold their stocks and they just leave it there, and then after some time they open, they actually earn money. Because as you can see, the S&P 500, right, is actually on a quite a bull run. If you buy your stock sometime last year, even at a high, probably you are in the greens right now. And if you buy maybe sometime 5 years back, 10 years back, definitely you're in the greens right now. So I cannot answer you how many percentage of traders are actually able to make money in the long run. But what I can tell you is, like what I said earlier on, don't time the market, be in the market. It's not about finding the best entry and all. It's about being invested, staying invested. Do not miss the next opportunity. Yeah. So you also asked that will you be sending the slides to us? The answer is we will not be sending the slide to us, but there will be a script, there will be a recording, and you can find them out on the website. So Matthew Tan, you ask, can you trade copper in CFD? For our platform, we do not have copper. Yeah. And someone, oh, anonymous attendee asked also, you can short stocks, right? Yes, if you are using CFD, you can short stocks. And you'll be able to buy or sell US stocks in SGD. However, do note that there will be an interest rate lah. You can find out more about the interest rate in our website. Okay. What is the last done price? I don't quite understand what is the last done price. What do you mean by last done price? You can you elaborate more? Okay, so for Jack Day, can you repeat what is CFD hedging? Unfortunately, we do have another webinar coming. Okay, you can stay tuned for our next webinar because right now we are currently on a time constraint. We cannot repeat on the CFD hedging part, but you can actually Google or learn about it lah. Okay, or you can stay tuned for the next webinar where we may share on CFD hedging. And Doreen asked, what's the cost of hedging? I don't quite understand the meaning of what is the cost for hedging. So if I were to put into perspective, right, I think hedging, you do not have any cost to it because if let's say you currently hold 1,000 shares in your stocks account and you short 1,000 shares using CFD, right? If you net it off, is a net zero lah. Okay, for example, like what I mentioned earlier on, if your stocks account is positive 1,000, your CFD account will be negative 1,000. If you were to do a complete full hedging, okay? So one reason why people use the hedging is because they hedge off the risk. So assuming your stocks account, you do not want to liquidate any position, you do not want to sell any position, you want to continue holding 1,000 of the stock, right? Then you can short using CFD, 1,000, you short 1,000 stocks using CFD. So if let's say the particular stock goes down in pricing, then you can take profit in your CFD position, your CFD, and then using the CFD profits, right, you can buy more stocks. So you bring down your average price lah. So I don't think there's a cost for it, but if you're looking at cost, maybe it's the commission fee or maybe the financing fee. Yeah. Okay, so due to time constraint, right, for those questions that are not answered, okay, or questions that I don't really quite understand what you're trying to refer to, you can either contact your PR or you can call in our hotline or you can read up in our website. So for more information, you can view our website on Phillip CFD and read the info sheet. You can find out more information over there lah. Alternatively, you can call in our dealing desk and the number is as such. Thank you for attending today. I hope you are able to learn something lah. Thank you.